Hello, everybody, and welcome to the Financial Time Traveler podcast. This is episode 17.
17.
Gold is the worst investment.
No way.
Ever.
We can't.
Ever.
No, we can't have that happen. I have a whole closet full of gold.
Do you really?
Well, drawer.
Okay. That's lies.
Maybe it's not a closet.
Ever?
Ever.
Forever.
It's a lot of gold.
Forever never seems too long until the gold is gone.
Right.
So, something very interesting has been happening around the world lately. I brought it up where it's happened in India. You brought up that it happened in Venezuela. Ironically, neither of us were privy to the other country's information. So I knew about India, you knew about Venezuela, but essentially the same exact thing has going on. And that conversation that we had led into an interesting conversation about currency, about investing, about how people perceive certain investment qualities and commodities and currencies in particular. So the Forex exchange of dollars, and then as well as gold, obviously, as a commodity. But tell the listeners what has been going on in Venezuela and India that seems to me like a social experiment.
Yeah. Well, you know what? It's more than just a social experiment. It's an experiment in how to exchange monetary currency, whether it's gold, whether it's rocks, whether it's paper, as a way of providing services. I need some bread, I need you to fix my fence, and I need to pay you somehow, right? So how are we going to do that? Well, here, let me give you this little robot right here. We can, what is a means that we are both going to agree on? Now the thing that's a challenge here is that you and I may agree, okay, you'll take this robot from me and you'll fix my kitchen.
Right.
But then what do you do with this robot? You need to make sure that if you take this from me, that someone else will take it from you so that you can get bread or food or gas in your car, right? Mm-hmm. And so the whole issue is how society functions, in which you can have a monetary exchange of a common denominated currency that everyone agrees, so that you feel very comfortable that if you take two of these robots from me, that you could take one of them and go somewhere and do something with it. Mm-hmm. And so what's happening very interestingly in India and Venezuela is that they have a major economic and, as you said, social experiment going on, where they're literally saying that in Venezuela, the 100 Bolivar note is worthless. They announced it on Monday this week, December 12th, and they said as of Wednesday morning, if you have any of these 100 Bolivar notes,
sorry guys,
worthless.
Sorry, not sorry. Hashtag sorry, not sorry.
So guess what everybody's doing Tuesday in what is arguably one of the most dysfunctional countries in the world, Venezuela? No one's working. You know what they're doing? Standing in lines waiting for the banks to open. Well, guess what? Banks were not informed.
Yeah, banks weren't ready.
They had no idea. What? Yeah. And so they wouldn't open their doors because people wanted to do what? They wanted to deposit their 100 Bolivar notes and be able to deposit in their account so that they could exchange it for whatever would be the currently accepted Bolivar notes, which were going to be replaced by 500 Bolivar notes.
Right.
Now, for a point of reference here, the 100 Bolivar notes in U.S. dollars is not dollars. It's actually 3 cents. That's its valuation. And so they instantly said this currency is of no value. So you came to my pastry store and bought some donuts and gave me some of these Bolivar notes, and now I have these, and then I find out Monday night what you just gave me is going to be worthless. And so I need to go down to the bank and get these deposited because I need to be able to pay for goods. And India did the same thing. And you were looking into that.
India is very interesting. They got rid of their top two currency values. So
highest denomination.
Basically translates to $14.07 US dollars.
Right.
And the Prime Minister came on TV at like 11 o'clock at night and said, hey, as of Wednesday, these denominations are no longer valid. You need to trade them in. 94% of India's cash transactions, all transactions happen in cash money.
Right.
So it's a very big deal. A lot of India's rural billions, 1.3 billion people, affected a lot of humans on that continent.
Very
of its
poor
own,
society.
Country. And so it was very impactful. Same story. Banks weren't ready. People were standing in line. Employers couldn't pay their employees until they exchanged this money. When you exchanged the money, you had to have proof that you earned it legitimately. So they're trying to get rid of a lot of the black market. And it got to the theory of you can't smuggle money or launder money when it's a smaller denomination. It's harder to launder or take $1 million in $100 bills.
What about the dry cleaners? Is that okay?
They can launder things. They have a license for laundering. I don't think it's money, though. I'm pretty sure they stick with the linens.
I still don't get dry cleaning. But anyways, go on.
You take your clothes to
I know,
dry
but what do
cleaning.
they do? Hang it in the air?
Yeah, it's dry.
I don't know.
It's dry cleaning.
I don't know.
It's actually magic.
Yeah, but what's interesting about this
Came
is
from
that
the Persians.
these are two countries that have virtually no technical or electronic currency structure. So as you said, they're predominantly all currency. So I get in a taxi and I don't give you a Visa card or anything.
Right.
I have to give you money. And so taxis stopped going out because guess what? Everyone was giving them in Venezuela, the bolivar, and in India, the rupee, and no one was accepting. So everything came to a complete halt.
Right.
And it was a disaster. And so this is a lead-in to how valuable is gold as a currency, because people buy gold as a means of a hedge against inflation. And by the way, you know what the inflation rate is in Venezuela right now?
I'm curious.
5x, 500%.
Wow.
Yeah. And what's also interesting is the
rapid.
the bolivar.
What we call rapid.
The bolivar currency
Bolivar, not boulevard.
no, it's var.
Yeah.
There's no D. Bolivar.
Exactly, Charlie.
Is that what I said?
Boulevard.
Boulevard.
It's okay. I forgive.
So the
I
Boulevard
forgive.
has been decreasing in value at 10 to 20% a month.
That's insane.
Yeah, crazy. So needless to say, it's a
Not lot of-
disaster.
And in India, I just looked at my notes. About 13% of all broadband traffic in the world comes through India. So not a huge dent at all, which
Right.
shows you not technologically
Right.
the same infrastructure that we
Right.
have in America to where they
Right.
could process payments like that.
Right.
I mean, obviously the wealthier folks in the larger cities like Mumbai or so on and so forth are able to process payments because they have that infrastructure. But when you move out into the rural areas,
Right,
where
which is
almost
predominantly everybody,
Yeah.
1.3 billion people.
in the entire country, yeah.
Right, right.
And so that can make a tremendous impact. And it's just amazing to watch currencies be devalued
Right.
instantaneously.
Right,
Where
right.
we have the power to say how much it's worth and how much it isn't worth.
Right.
Now, when we started discussing this, it
Right.
transitioned into what has been the currency for the remainder of human history. We
Right,
can go
for
back
the most part.
As far as we can research currency, gold has been around.
Predominantly gold,
It's
silver.
shiny. It's malleable.
Right.
It's limited in quantity.
Right.
It's easy to shape and to make into your gold structure. It's easy to weigh,
Right.
to test its purability.
Right.
All the attributes of a great currency in the ancient
Could
world.
even get a wife.
Ooh.
Yeah.
Now the ring actually,
we will
the
go
ring's
there.
been around for a while. It's
Yeah.
the diamond that they get you.
Yeah,
And diamonds are
as,
forever.
as a point, precious metals along with precious stones. So rubies, gold, rubies, diamonds, etc.
Yeah, I saw that Pirates movie.
Right, have been also means of currency. But the whole point of it is an agreed upon currency or medium that a preponderance of society will accept and interexchange, so that you have the confidence of receiving a gold, a diamond, that you know you can take that somewhere and then respond with some other purchase that you want to make.
Correct, sir.
Okay?
And what I was thinking of,
Yes.
and I know we've talked about this before. I don't know if I mentioned to you
And
yet.
so paper became the obvious, most common means of currency.
There we go.
All right.
The way to follow that sentence up with a bang.
Okay.
And then what happened? So currently we live in a world where I feel like there are three types of investors if I had to put them into three buckets.
Okay.
There's the people who think real estate is the only way.
Right.
There are the people who think the stock market is the only way.
Right.
And then there are the people who think that like gold, precious metals, commodities in particular
Right.
are the only way.
Gold bugs.
Right. Or
Uh-huh.
gold bugs, or, they own oils, they own art, collecting coins.
And we should talk about that. Vehicles, art. I think that's a great
We will.
podcast that we can talk
If you want to hear
about.
about it, email me. If I get a bunch of them, we'll do it.
Right.
That's a deal.
Because antiquities, art, and collectibles have been great investments. And
If you're
not-
an amazing speculator, yes.
Right.
So for
and
1%,
knowledgeable.
So I would completely argue with that point to say
Okay.
that they are, for the most part, terrible
Okay.
investments.
All right.
Absolutely horrendous.
Well, I'm gonna have to get rid of all that artwork.
Unless you're very rich and you can afford to buy the nice stuff. But for
Yeah.
the everyday investor, good
Right.
luck going and finding
Right.
a nice Pablo Picasso piece to put in
Right.
your home.
All right.
So for gold, there was an interesting
Well, I'm
study
going to get rid of my
done
Jimi Hendrix guitar then.
in his seminal book, Stocks for the Long Run.
Okay.
Economics professor Jeremy Siegel looked at the various performances of asset classes across the board since 1802. Mm-hmm. So
Yeah.
this predates a lot of these stock exchanges. I'm curious. I want to dig more into his study because everything changed pre-1950,
Right.
and then before that, when we didn't even have the Investment Advisors Act, the Investment Companies Act.
So that's interesting. 1802. We're going to come back to that
collective
date.
investment trusts before that, which were kind of like the original mutual fund.
Okay.
But just looking back into the free market to 1802 in America, adjusted for inflation.
Okay.
Now, if you bought $1 worth of stocks, bonds, T-bills, and gold. This would be the
stocks,
index.
bonds, T-bills, and gold. All right.
Beginning in 1802 and ending in 2006.
Okay.
Which is when he did his study.
Right.
This is what Siegel calculated that $1 would be worth today, adjusted for inflation.
Mm-hmm.
Now, stocks were the
204 years.
Were the huge winners, correct.
Okay.
Stocks were the huge winners, growing an initial dollar investment to $755,163. Wow. You're a winner.
Yeah,
winner.
And that's real money too. $755,000.
That's not fake money.
No,
that's real money.
Yeah,
we're not playing Monopoly here.
Now this is inflation adjusted, correct?
Yes.
Okay.
So if you added in inflation, that number would be ridiculous.
All right, that's a good number.
But yeah, inflation adjusted. I mean, you lived. Not only did you live 204 years, congratulations, but you made a good.
Yeah,
decent return,
and you can enjoy it.
Yeah, $1. Now, if you did $2, well, I'm not going to go down.
Did that include $1 of Apple stock in 1982 and that kind of thing?
No. They wouldn't be worth that much.
Okay.
So bonds and T-bills.
Okay.
Trailed dramatically. So Treasury notes.
To understate the
dramatically.
The result. Yeah.
Bonds. You would have $1,000. $1,083,
right?
And T-bills $301.
Wow,
so that's a
little less.
That's a good return on your 204 year investment.
$1 is now $1,000.
So the big surprise was how badly gold.
Yeah, this
fared.
is interesting. Pay attention here. This is really something.
I'm looking at you, buddy. Once again, this is Nyle and Anton Bayer. We're from Financial Advisor, Up Capital Management. We've done this for a long time, but more so we kill it in the content game at financialtimetraveler.com. You can go there and watch this, listen, subscribe, see all the cool stuff. Anyway, so when we get to the gold.
That was a shameless plug. Very
$1.
Well done.
I had to put it in between. It's like, you know when they do it? Shut up now, just give me the answer. It's $1.95.
Wow.
You made
unbelievable.
You made 95 cents.
Wow,
my friend.
That wasn't even worth living 204 years.
No.
So $1 of gold.
Wait, hold on.
What?
Never mind.
Okay.
I wouldn't put a price on living, sir.
Yeah, not certainly 94 cents.
95 cents.
Oh, 95. Oh, well, I would took a penny away.
I'd live for free.
So
a lot of us live in debt.
Gold was a bad investment.
Yes.
And yet people continue to buy gold all the time. Now gold is $1,153. So how do you justify that $1 of gold now is $1,158? What did I say? $158 an ounce. So it's actually appreciated. But your point here, I guess, Nyle, is that with inflation, because merchandise is still going up, so as Mel Brooks, it's all about merchandise. Merchandise is still going up.
Merchandising.
Exactly. It's still going up, but gold was going up equal to or slightly less than or slightly more than. So $1.95 is all it could buy today versus it could buy $1 in 1802.
Hey, if you're an optimist, you almost doubled your money. You know, I'm just saying.
So gold has historically, on a long-term basis, been a very poor investment. Now, there has been times where gold has been the best performing asset class during periods of time. So during the latter part of President Carter's presidency in 78, 79, gold, 77, 78, 79, gold went from $35 an ounce to $600 an ounce. It was the best performing asset class during that time period. So in very short periods of times of panic, principally panic, is where gold can be a very, very good investment. But historically, on a long-term basis, it has not.
I don't think that's valid anymore. And you're killing our argument, first off. Secondly,
well, we're talking about longer
gold
term.
Is going to become, and I guess I'll have to educate you to our listeners, but gold is going to become obsolete over time. And we'll get into that at the end of this conversation when we talk about how technology is able to store currency and that gold was fulfilling that void previous to technology, which is the Internet of Things, about 10 years old the way it sits. Mm-hmm. But as an investment vehicle, owning gold as a commodity in its own, 3D physical state. I bought it and I want a bullion, which is the pure version that is yet to be made for
distribution,
jewelry and cool stuff.
Right.
The The raw materials is extremely inefficient vehicle. So first you buy it. Mm-hmm. First off, the bid and the ask price on raw material of gold, the spread is so wide that pretty much as soon as you buy it, so what they're
the asking
what
price,
the agent is willing to, what is they're asking for you, what they will buy it for, and then what they'll sell it for. The spread is so large that pretty much as soon as you buy it, you're underwater.
Yeah.
Now you have to get that gold shipped to you.
Right.
And then you have to take that
and store it.
Right. So the shipping costs money.
Right.
The storage costs money. Where are you going to store it? Are you going to store it in your house? Or are you going to insure it? Insurance costs money. Are you going to store it at the bank? The bank storage costs money.
Right.
Are you going to insure it at the bank?
Yeah.
Bank insurance costs money. All of these things lead to inefficiencies.
Right. Now, it has gotten a little bit more efficient, though, because $10,000 of gold.
Is this what we're doing today?
Yeah.
We're fighting? We're fighting.
$10,000 of gold is only 8.6 ounces. I mean, you could put that in your pocket. Now, in 1933, it was 285
Still
pounds.
got to insure it.
285 pounds, yeah, you do. But $100,000 of gold in 1933 would be 2,800 pounds, a little over a ton. Whereas today it's 5.3 pounds.
Which you could probably fit in the back of your crew cab.
Yeah, so it has gotten a little bit easier to store.
I saw the commercial.
Yeah, that was funny. Or the new pickup trucks. You see the new pickup trucks where they drop. Yeah.
Now imagine that in gold.
Gold. Dink.
Same amount.
That's very funny. But yes, it is still, as an investment vehicle, people are buying gold. And as recently as this prior to the election, I had clients call me up in early October and say, get me out, sell all my stock, get me out. I want to be all in cash. And I had one client go as far as put it all into gold.
Oh, buddy.
Uh-oh.
He lost his arm.
Uh-oh.
For those of you listening who haven't seen the video on YouTube, our friend here, Buzz, just lost his arm. He's a robot.
So people were buying gold as recently as 2 months ago as a surefire way to beat all other asset class and, of course, be a hedge against inflation or social unrest, which people were predicting if Donald Trump was elected, there'd be social unrest, the stock market would collapse, and so they were
all
buying
of these
buying
points
gold.
we will cover later on in the podcast.
Okay.
Stick to the script.
Okay.
So we will cover this.
I just got the script 2 minutes ago.
I know, you've been sick. You've
Yes.
been out. I'm sorry for the pause, guys, the listeners. Anton will get back to us once we scrape this rust off. But going into, it's a very inefficient piece of commodity to buy as a 3D. I want to buy it and it's going to be shipped. If I'm dollar cost averaging in my purchases, they're going to be delivered once a month, and then I got to take it and I got to make sure I'm at my mailbox, et cetera, et cetera. So what did the stock market do? The stock market said, I'm going to make an ETF because there's an ETF for everything.
Right.
There's an
Exchange
ETF for horsetail.
traded fund.
Did
It's
you know
like
that?
an index fund.
You can buy horsetail ETF?
No, I
ETF?
did not
Yeah, they
know
store the horsetail in a magical storage bag. I'm making all this up.
Yeah, I thought so.
There is an ETF for pretty much everything. So they made an ETF where you could buy gold, GLD.
Right.
Or as we call it on the street, GL Dizzle. And it's not secured. Well, it is secured by real gold, but it's held by a custodian in a vault.
We don't know where it is. Yeah.
They don't have to insure it.
Right. And they don't have to disclose how much they have.
They don't have to disclose how much, so you don't really know if. I mean, you have your full faith and trust, but then at the end of the day, the gold that's there, it's not redeemable with the shares that you have.
Right.
So even if the world did collapse, you have this as your hedge.
Right.
You say, okay, I want my gold. They say, sorry, your shares don't redeem the gold. We're not giving you the gold because of this, this, and that. Not only that, but it's overseas. Blah 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 blah. So really, is the ETF fulfilling that need where you are trying to hedge with a commodity that you can't even access?
In the true sense. But as just a trading asset, it works perfectly because you're buying and selling on a daily basis. For the most part, unless there's a run on gold, for the most part, there is a tradable market in which the shares will buy and sell fluidly, and there has been no stoppage of that so far.
We do not recommend anybody listening to become day traders or think that they can buy and sell day to day and time the market, especially with an investment like gold.
Right.
And why do I say especially with gold? Because what we're getting at is that this is the price that is put into gold is purely speculative. There's only about 10% of all gold that's on the market is used for utility. 90% of all gold is used for jewelry. Therefore, it's not something that you can that is secured by a tangible value that is actually real, like a company that has full of smart people who are building a product, providing earnings,
Right.
revenues,
Dividends.
income, dividends.
Right, nothing.
Those are real
It's a
investments.
Rock. It's a rock. It just sits right there.
It's like a pet rock.
Yeah.
It is. It's like pet rock, and we're all buying and selling
And
it.
pet rocks were killing it in the, what was that, the early 80s, that pet rock. But the thing about gold is that it's even hard as an investment advisor, is that you typically want to have technical analysis. You want some means of being able to determine the past to project the future. So as you're putting together charts and you're saying, okay, historically it hits this high, this is its 50-day moving averages, and it's very hard. And my entire career, I've stayed away from gold. I've never understood it. I did some future tradings for about a year and a half.
As a technician, you can understand it.
Well,
because
even
you
still,
look at the
it could-
charts and you're like, okay, that
but
makes sense.
it can change because
But
it's
what
a
is
very
it?
fickle market.
It's like a volatility index.
Right.
It's pretty much, and it's ironic
Right.
that it's a defensive play, but it's pretty much just a measure
But
of
it's an
people's
odd
sentiment.
Yeah. And so my clients that sold all their cash and bought gold in October, they've been hurt like that. And this year, gold's been a horrific investment as compared to the rest of the markets. It's been up and down, and at one point down almost 30% this year.
Now,
So it's not a great
originally,
investment.
Throughout the test of time, gold has been used, follow me now.
Okay.
Gold has been used as a storage of currency. Where
right.
I want to, let's say I'm living in the early 1900s, so I don't have access to a bank account. I do have access to some gold. I'm going to store my gold because I am basically saving up my family's, fortune.
Right.
This is how I store money. I don't trust the bank because I keep buying and selling. JP
Right.
Morgan hasn't become our hero yet and gone out and saved the banks and started the Fed.
Right.
So, excuse me, people are texting my iPad. So previously, throughout the test of time, gold has been a storage. This is all pre-mass communication.
Right.
Where now we can store our money in much more efficient vehicles than a commodity.
Right.
And not only can you store it in values of companies, but then you
Right.
can store it all electronically.
Right.
For the most part, which is highly efficient.
Right.
And computers could do a much better job at a lot of tasks than humans can.
Okay.
And there's this great episode of The Twilight Zone where,
I used to love that show.
me too,
Goofy, weird.
back when I lived there.
Yeah.
No, Twilight Zone's classic. Some of the concepts are amazing. So the
Rod
concept is that,
Serling.
like these five thieves steal a bunch of gold.
Right.
They store it in the desert. The desert, they all try to kill each other basically and rob each other for the gold. There's one guy who shows up. He goes through a time travel. It's 50 years later. He's lost in the desert. Somebody finally finds him. He offers them a bar of gold to give them for them to give water back. And they're like, and he dies right on the spot. But they're like, why did he have gold?
Right.
Nobody's had gold
Right.
for the last 50 years.
Right.
After it's been devalued and taken off the market, essentially.
Right.
So it was getting to the point where even back then, Sterling was pointing at the fact that gold does not have, it's whatever value that we give it.
Right.
And that in the future, most likely, it'll be worth nothing.
Yeah. And what's interesting is that is somewhat of a true story of what's happened in the history of gold. In 1933, President Roosevelt ordered anyone that had $100 in denomination or more
that's what it
of
was.
gold were required to turn it in, go to the bank. It would have been illegal to hold gold. It was confiscating gold all around America. People had to actually turn in their gold.
Just like Venezuela and India right now with their dollars.
Well, they just made the dollars worthless.
Yeah. Well, that's what
unacceptable currency.
So in the Twilight Zone, it wasn't that the gold had been devalued. It's that scientists 50 years earlier had figured out how to manufacture it.
Was that the story?
So
Yeah.
gold was
Right.
worthless. But alchemy
Abundant.
aside,
Abundant. Right.
it tells the same tale in that,
Right.
and the government, like you said, can confiscate
And a lot
it
of
at
people
any time.
don't know that President Roosevelt told everybody, you have to turn in your gold. It's illegal to hold on to it. So that was very interesting. And it wasn't until 1971 that President Nixon took the U.S. entirely off the gold standard, which means the entire U.S. Dollar was removed. And then in 1974, shortly after President Nixon in his second term was impeached, that President Ford signed it that it was legal to own
Right.
gold. And so a lot of people today own gold and have gold in safety deposit box, but they don't realize that it was only as recent as 1974 that President Ford made it legal that you could own and hold gold.
That's a trip.
Yeah.
Well, and in bullion form.
Right.
You could always have the the jewelry version.
Right,
and the jewelers
right.
had to have
Yeah,
licenses to get it.
Thanks for that
from the
qualifier.
other direction. But
Yeah.
people were like, wait, my grandpa gave me that gold ring.
Yeah.
How did he have it?
I used to have I have an accountant still, but every year he would give me a silver bar. He gave one to all of his clients or his best clients, and every year gave me a 1 ounce silver bar every year. And so I've collected these. I have like 8 or 9 of them, 8 and 9 ounces of silver. But it was kind of a cool gift every year. I got it in a little green felt packet, and you pull it out, and there was a silver bar. It was kind of cool.
Here's $12.
Yeah.
For my best clients.
Yeah.
Here's $12.
I didn't look at it as $12. I was like, wow, look at that. That's really
so
cool.
funny.
Or I could have had 10 Snicker bars. Either or, you know.
So we gotten into that it's not an efficient investment vehicle.
Right.
That you can't get help from the stock market either.
Right.
That it's basically a price that has been fixated by what you deem it to be. It's not secured by anything that is real.
Right.
It's mostly speculative,
Right.
driven by the market. Not only that, but the people who buy in gold don't have to be licensed.
Right.
So the people you're dealing with when you're buying and selling gold,
So there's trading costs and then selling costs.
they're not fiduciaries. I
Right.
mean, you see the commercials on at night.
Risk, selling and trading
Yep.
risks, right?
But, and then also how to store currency. What gold once did, technology now does better.
Right. And I think the most important statistic that we brought out that you've discovered is on a long-term basis, it has historically not been a good investment. There are periods of times that it's been exceptional, like anything, but on a long-term basis, with the ability to build wealth and consistently build your wealth, and more importantly, the wealth that you have you can depend on, gold has not been that asset class.
Now, with me personally, I would say my favorite way to invest is have a significant portion of your pie going towards long-term investing. So cheap, good investments like index funds, for instance, things of that nature, a very strong, diversified asset allocation for a long period of time seems like the sure winner.
Asset
And
classes
then,
that have historically held their value.
And then having a solid portion of that pie being for your hedge, your risky investment. So I have like this conservative portion over here, and then I have this small point, like a tail hedge, where I'm going all in on certain things, whether that's businesses, whether that's buying and selling options, whether it's whatever I want,
or
buying
more
real
riskier
estate
type of investment, stocks and bonds,
buying foreclosure homes.
Yeah,
These are
exactly.
things that are much more risky. That I have this money over here, and even with that money, I don't want to buy gold.
Right. But, and then the one point which we won't go into, but buying discounted below market is a great way to build wealth. If this little robot's worth $2 and I was able to buy a ton of them at $1, that's a good investment. And so buying below market is a very good strategy. Gold is one that's very difficult to do that. It's going to be actively traded.
And as these technologies get better, they're only 10 years old.
Right.
The rest of the world is just getting on board with broadband services. So who wants gold? Almost 30% or more of the demand. I'm sorry, let me backtrack.
All right.
Half of the world's jewelry demand for gold comes from India and China. Now, India accounts for 13%.
Wow.
No, 50% of all demand for gold comes from India and China.
Wow.
Now, India, only 13% has access to, that has broadband penetration.
Okay.
In China, only 1.1% has broadband penetration.
Wow.
So half of the demand is coming from countries that don't have the ability to store value in anything else but a commodity.
Right.
So what happens when that
They
ability,
don't have the technology.
when they have technology and they have the ability to store currency in a digital format, that demand for half of the gold is there.
Right.
Now, almost 30% more of that demand comes from underdeveloped countries, just lumping them all in, with similar low broadband penetration rates.
Right.
So we have 80% of the demand for gold coming from areas that don't have a high penetration of broadband services.
Wow.
Once that broadband services change, technologies become more efficient. For instance, in America, almost 9 out of $10 is digital. Once that starts bleeding over into the globalization effect with each currency in their own domestic areas, my personal belief is that gold will be devalued tremendously. And as a long-term investment, it will be a bad place to be.
Right. Right. Very good. Very, very well done. So the summary, I would say, correct me if I'm wrong. The summary is that gold is a long-term investment, is a poor long-term hedge against inflation, a poor long-term asset accumulator.
Absolutely.
And as short periods of time, it can offer very strategic day trading speculation, but at great risk. Like my clients that were for sure going into election, they bought gold and gold went down.
Because you can day trade anything.
But for our viewers and people that want to consistently build wealth, other asset classes, and I think that's the main thing we want to point out here, is that gold as an asset class, as a diversified investment, would probably not be on our list.
Right.
Would you say that was fairly stated?
That was no, the summary was great.
Okay, good.
I loved it.
Thank you.
You did a good job.
Excellent.
I'm so proud of you.
All
Welcome
right.
back, baby. I'm glad your voice.
Yeah.
He lost his voice
entirely
for a couple weeks.
That was pretty bad. Just a side note, I had a client fly in. I lost my voice twice this year, so during the summer, and the appointment was set, it was weeks in advance, and they flew in, and I had completely lost my voice the night before. And I had no idea.
Sorry, guys.
And what happened was I started drinking tea and honey, and I got enough traction to where I could get my words out. It was over dinner, and met in San Francisco, and I was able to make it through. But I'm driving down, and I was practicing just to get a sound, and I couldn't. I'm thinking, man, this is not going to go well. Hey, thanks for flying in. Can't say all that effort. Anyways, good job.
No, good job. Good job with you as well. Yeah, I hope you learned American Sign Language. It reminded me of a lecture I watched of a professor in communication talking about the power of body language and kind of the history of how we receive neurologically information through communication. But the whole time he was giving his talk, he was giving perfect body language as an example of what he's talking about. So anytime that the door opened in his mind, he had all of the body language for it. And so he was it was awkward, but then it was really cool how he was kind of showing
and
that
then
out.
there's negative where you're saying the opposite with your body language than what.
That's when you know there's a conflict. When someone's telling you yes, but their body's telling you no. Anyway,
right,
so
wrap
if you
it
like
up.
this information, make sure you go to financialtimetraveler.com. If you go to financialtimetraveler.com/PDF, there's going to be a special gift for you. Inside of that hyperlink, just for our podcast listeners, you're going to get a list of my favorite top 5 resources that you can implement today that will save you dollars tomorrow. Maybe even today. They could save you. They could save you money, which, although today is just yesterday's tomorrow. So decisions today change tomorrow is what I'm trying to say.
And the last thing is talk to 4 people. Tell them about you listening to this podcast. Tell 4 people today that you listen to this podcast and you need to tune in and listen to Nyle and Anton.
Anybody. Preferably people who you have brevity with.
Right.
Not just a stranger. Hey,
but 4
listen to
people.
this.
4 people.
4 people you care about.
Today.
Your mother, your father, your brother, and your sister.
There you go. 4.
Kissing babies, shaking hands.
And then we'll expand tomorrow.
Make sure you go to financialtimetraveler.com/PDF to get that resource page. It's very powerful. It took me years and years and years to culminate while I was sitting in a dark closet thinking about the best ways that I can serve you. Financialtimetraveler.com/PDF. Otherwise, we'll see you. Like, subscribe, all that good stuff. You know what to do. We'll see you next time. We'll be out of here in the speed of light. Dave Ramsey's out there. Well, let's look at the numbers. Has Dave Ramsey actually made an impact on the macro numbers of Americans that are saving for retirement? I would say he hasn't, because if he
2016 going into 2017, and we're looking at opportunities that you may have in starting businesses, and that's what today's segment is all about, is what are ways that you can identify business. If you already own a business, what ways can you improve it?
10, 9, ignition sequence start. 6, 5, 4, 3, 2, 1. The Eagle has landed. Roger, we copy you.